Oil prices decline as economic concerns mount. As of April 17, 2025, oil prices have experienced significant fluctuations due to combination of global economic factors, geopolitical tensions and shifts in the supply and demand dynamic. This overview aims to the recent trend in the oil price, the underlying cause and implications for various stakeholders, including consumers, industries, and national economics. Recent trends in oil price in early April 2025, global oil prices witnessed a noticeable decline with Brent crude and West Texas reaching the lower level since 2021. This downturn was primarily attributed to elastic trade tightness, particularly the imposition of new tariff by the United States, which demands global economy growth prosperous and continuously. Oil demands. However, by mid-April, oil prices began to recover slightly. Brent crude rose to $66.40 per barrel and WTI increases to $63.13 per barrel. This rebound was influenced by new US sanctions on Iran and additional output cuts placed by some OPEC members, which raised concern over tighter supplies. Factors influencing oil price fluctuations: global economy uncertainty. The announcement of sweeping tariffs by the US has led to the concern over a potential slowdown in the global trade. Such trade policies can reduce industries' activities and transportation needs, thereby decreasing oil consumption. OPEC and non-OPEC production decisions. OPEC, along with aligned producers like Russia, plays a private role in determining global oil supply. Recent decisions by OPEC members to cut out have aimed to stabilize price aimed at declining demand. Geopolitical tension, sanctions on major oil producing countries such as Iran can disrupt global supply chain. This recent UN sanction targeting Iranian oil exports have contributed to supply concerns influencing price dynamics. US domestic policies and production cost. US oil producers face challenges due to increased cost from tariff on imported equipment and materials. This high operational cost, coupled with low oil prices, have made drilled less profitable, leading to reduced production activities. Implications for global economic for oil producing nations. Countries heavily reliant on oil exports such as Russia faced budget pressure due to declining revenues. Russia, for instance, had based its 2025 budget on oil averaging $70 per barrel but has revised expectations to $60. To mitigate the impact, strategies like increasing exports volume and adjusting fiscal political are being considered. For oil importing countries, nations like importing significant quantities of oil may benefit from lower prices through reducing energy cost, potentially easier inflation pressures. However, the benefit can be offset by broader economic slowdown that affect trade and investment. Impact on industries and consumers. Transportation and manufacturing. Lower oil prices can reduce operational cost for transport and manufacturing sectors, potentially leading to lower price for goods and services. However, if the price declines is due to reduced demand for economic slowdown, the net effect may be neutral or negative. Consumers might experience lower fuel prices, increasing disposable income. Yet, if the broader economy is constrained, job security and income levels may be adversely affected, negating the benefits of the cheaper fuel. Future outlook. The tragedy of oil prices will depend on several factors: resolution of trade disputes, easing of trading tension could boost economic activity and oil demand. OPEC's production strategies. Continued coordination among oil producing nations will be crucial in managing supplies level. Global economic recovery. The pace at which major economic recovery from current showdowns will influence demand. Technological and political shift. Advancement in alternative energy and political shift towards sustainable may impact long-term oil demand. In summary, which recent fluctuations in oil price are influenced by a complex interplay of economic, political, geopolitical events and market dynamics. The situation remains fluid. Stakeholders must stay informed and adapt to negative the overall landscape.